Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of all the corporate mumbo jumbo. And today we're diving into Kontoor brand's latest financial report, a company known for its classic denim and outdoor wear. Get ready because this report has some big news, including a major acquisition that's shaking up their numbers. Before we dive in, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below where you can chat with us and other viewers about these filings. Well, it's that time again for Kontoor Brands to give us a peek behind the curtain, and their latest filing covers the period ending right in the middle of the year, June 28th, 2025. Kontoor Brands, as you likely know, is the powerhouse behind legendary names like Wrangler and Lee. And more recently, they've added the rugged outdoor gear brand Helly Hansen to their lineup. This acquisition is a huge part of their story right now, and it's really changing the game for them. Speaking of Helly Hansen, this report details the big purchase that happened on May 31, 2025. Kontoor bought Helly Hansen for about 1.3 billion Canadian dollars, which works out to roughly 960 million US dollars. This means Helly Hansen's financial results are now part of Kontoor's numbers, and that's a significant factor in understanding their current performance. Let's first look at the company's overall financial health as shown in their balance sheets. We see that by June 2025, Kontoor's total assets jumped significantly to nearly $2.7 billion, a big leap from December 2024's 1.65 billion. This massive increase is largely due to the Helly Hansen acquisition, which brought in new assets, including a substantial amount of intangible assets and goodwill. Notice how intangible assets leapt from just over $11 million in December 2024 to a whopping $451 million by June 2025. This is a classic sign of an acquisition where brands and customer lists are valued. Similarly, goodwill, which represents the excess purchase price over the fair value of identifiable net assets, also surged from around $208 million to almost $488 million. This hefty goodwill figure signals a significant premium paid for Helly Hansen based on expected future benefits and synergies. Now, to pay for all this, Kontoor had to take on more debt. Their long-term debt climbed from about $740 million in December 2024 to over $1.3 billion by June 2025. This is a crucial point to watch as it increases their financial obligations. Switching gears to how the company is performing in terms of making money. Let's look at their income statements. For the second quarter of 2025, net revenues were up about 8% to nearly $658 million compared to the same period last year. This increase is partly thanks to Helly Hansen contributing about $29 million in revenue in its first month with Kontoor. Their gross margin, which is the money left after accounting for the cost of goods sold, also improved nicely. It went up by 1.6 percentage points to 46.3%. This is a good sign, showing they can manage their costs effectively even with the new brand. However, that their selling, general and administrative expenses, or SG&A, also went up. As a percentage of revenue, these costs increased to 34.4% from 32.3%. This rise is mainly due to the costs associated with the Helly Hansen acquisition, including integration expenses and some restructuring charges. Because of these factors, operating income saw a modest increase of 4% to about $78.5 million. It's good progress, but the rising expenses did temper the revenue growth. Remember those currency hedges they put in place for the Helly Hansen deal? Well, they paid off in a big way this quarter. Other income net was a positive $30 million, a huge jump from a small expense last year. This was mostly driven by a $33 million gain from those hedges. This all combined to boost net income by a strong 43% to $73.9 million. And on a per share basis, diluted earnings per share rose to $1.32 from $0.92 from $0.92. Last year, that's solid growth even with the impact of the new acquisition. Looking at the first half of the year, net revenues grew about 3% to 128 billion TARs. Again, Helly Hansen contributed to this, adding about 2% to the overall revenue growth. Their gross margin also improved in the first half, going up by 2 percentage points to 46.9%. However, SG&A expenses as a percentage of revenue increased to 35% from 32.1% last year. This was mainly due to acquisition costs, Helly Hansen's operating costs, and higher restructuring charges. The corporate and other expenses are also a big story for the first half. They went up significantly, largely due to those acquisition and integration costs, but were partly offset by those nice gains from the currency hedges. Now let's break down performance by brand. Kontoor smartly organizes its business into three main segments: Wrangler, Lee, and the newly acquired Helly Hansen. Wrangler continues to be the powerhouse. For the second quarter, its revenues grew 7.5% to over $461 million. More importantly, its operating margin expanded to 23.4%, a solid improvement from last year. This strong performance is driven by good sales in the Americas and favorable costs thanks to their Project Genius initiative. The Lee brand unfortunately saw a decline. Revenues were down 5.5% in the second quarter and its operating margin slightly dipped to 7.5%. This seems to be due to softer wholesale business, although their direct-to-consumer sales are improving. And then there's Helly Hansen. Since they were only acquired at the very end of May, their contribution in this report is limited to just 1 month. They brought in about $26.7 million in revenue in that month, but posted an operating loss of $4.8 million. This loss is expected given the seasonality of the business and the upfront cost of integrating a new company. Let's look at the cash flow. During the first 6 months of 2025, cash provided by operating activities was $103.3 million. This is down from $152.7 million the same period last year. The main reason for this drop is a significant increase in their inventory levels and unfavorable changes in income taxes. Investing activities show a huge outflow of $855.45 to $11.4 million outflow last year. This massive difference is almost entirely due to the cash spent on the Helly Hansen acquisition. On the financing side, Kontoor brought in $556.3 million in cash in the first half of 2025. This is a big reversal from using $137 million from taking on new debt to fund the Helly Hansen deal, including drawing down new term loans. It's also worth noting that Kontoor has a strong available borrowing capacity of nearly $494 million on their revolving credit facility, plus about $107 million in cash and cash equivalents. This provides a good cushion for managing their finances. One interesting detail is that stock-based compensation, while a cost, also means employees are getting equity. This amounted to about $20.80 million last year, suggesting more focus on aligning employee incentives with company performance. The company is also keeping an eye on new accounting rules. They're looking at how new disclosure requirements for income taxes and expense reporting might affect them down the line. Now, let's talk about the risk. Kontoor highlights ongoing macroeconomic challenges like high interest rates, inflation, and supply chain disruptions. These are pretty standard concerns for most companies right now, but they also specifically mention the potential impact of increased tariff and trade policies. A key risk they mention is data security. Like many companies, they're exposed to potential breaches, which could mean data loss or financial harm. On the bright side, when it comes to their financial reporting, management states that their disclosure controls and procedures are effective, meaning they're doing a good job of making sure what they tell the public is accurate and timely. Overall, Kontoor brand seems to be navigating a complex environment pretty well. The acquisition of Helly Hansen is a bold move, diversifying their brand portfolio and expanding their reach into the outdoor market. Wrangler continues to be the star performer, showing strong revenue growth and improved profitability. Lee, on the other hand, needs some attention to reverse its sales decline. The increased debt is a definite point to monitor, but their strong cash flow from operations and available credit lines seem to provide adequate liquidity for now. The company's focus on cost control through initiatives like Project Genius and the successful hedging of their acquisition costs are commendable. So what's my take? Kontoor is making strategic moves, but they're not without challenges. The integration of Helly Hansen will be key, and they need to ensure Lee gets back on track. The debt load is significant, but manageable if they can maintain their operating performance and control costs. The company is clearly investing in growth, both organically through brand initiatives and inorganically through acquisitions. They seem well positioned to capitalize on consumer trends in both casual and outdoor wear. What's your take on Kontoor brand's latest report and their big acquisition? Do you think Helly Hansen will be a game changer? Let me know your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives into corporate filings. Don't forget to join our Discord community linked in the description to keep the conversation going. Thanks for watching. See you next time.